Mid-caps lead as the market notches more gains. Utilities and energy are the big gainers, even as healthcare and consumer durables are the big drags.
Morgan Stanley's Jonathan Garner tells CNBC-TV18 that India is poised to become the largest emerging market, and index heavyweights like Reliance Industries could see serious global investor attention.
Tata Power is likely to have submitted bids for privatization of 2 power distribution companies in Uttar Pradesh. The state is looking at a PPP model with 51% private holding, for which it has invited advisors.
The board of Aditya Birla Fashion clears a preferential issue of shares to raise nearly 2,400 crore rupees to trim its debt, while promoters will bring in about 1,300 crore rupees. Fidelity Group will infuse over 1,080 crore.
JP Morgan's Jahangir Aziz tells CNBC-TV18 the rupee needs to depreciate to bring the exchange rate back to normal. He, however, sees RBI staying its course on easing with a rate cut in February.
Good afternoon, you're watching Halftime Report on CNBC-TV18. I'm Hormuz Patakia. With me as always is Mangalam Malu. We needed some follow-up buying from yesterday's recovery, and that is exactly what we are currently witnessing on the screen. The benchmark indices are in the green, the broader markets are in the green, so it's good going for the bulls so far. 23,250 is where the index is, off the highs of the day, but still holding on to gains, and that is the bigger takeaway from the Nifty, at least as of now. The mid-cap index is up another percent after gaining almost 2.5% in yesterday's trading session, so it has nearly or thereabouts recovered everything that it had lost in Monday's trading session. So, and the small cap index too at the highest point of the day now, 1.25% higher for the small cap index as well. So good going for the broader markets, and there are plenty of movers as well. There were PSU banks that were moving yesterday. They are the ones that are seeing a bit of a cool off, but otherwise it's been a fairly good session so far.
Fairly good session, and in a way I would call it a remarkable session. Wouldn't rule out a possibility of a melt up in the second half of trade as well. The reason why I call it a remarkable session is because after 9 trading sessions, the high of the Nifty today is actually higher than yesterday's high as well. So that's an important mark. Yesterday was the Nifty Bank which crossed its previous day's high after many days of making lower highs and lower lows as well. So the bulls are attempting a bit of a recovery, and the FIIs in the index futures and options space also consolidating their positions, not going further short than what they were already. So all these factors point towards some stability, and if there is some stability, there will be absence of further selling, and maybe as a result of which we may see a bit of an up move. How long that up move lasts is something that we'll have to keep an eye out on, but for now the possibility of support at lower levels is keeping the mid-cap index well bid, because that typically is the high beta name. We have around 1,700 stocks advancing for just about 700 stocks which are declining. Look at the stocks which had seen a big decline earlier and now attempting a pullback. Trend. Yesterday we had a technical analyst join in and say that, they are looking for targets closer to 5,500 for Trend. Turns out the Trends defied that. It's up nearly 3.5% today. Dixon Tech is another stock which has been under severe pressure, but currently trying to attempt a bit of an up move. So Dixon Tech is up around 3.5%. And even something like an RBL Bank, which has already been a big underperformer, currently looking like, benefiting from the lows of trade and at the high point itself. But the PSU banks are in focus because the government, we understand, is looking to sell stake in 5 PSU banks, while the street is expecting potential divestment in other PSU companies as well. Hormaz, you have compiled some data earlier. The government's stake in all the public sector companies was close to 2.5 lakh crores. Now it's come down.
It's come down, and that is because of the correction that you've seen in a lot of these PSU stocks, right? When we last visited this piece in January of last year, that stake was around about 2.5 lakh crore rupees, and since then we've had a lot of divestments as well, a lot of QIPs, a lot of these PSU banks, so that proportionately as well, and of course the correction in the PSU banks. So currently at 2.1 lakh crore rupees. Now there are 16 PSU stocks where the government shareholding is in excess of 75%, which is the mandate for the minimum public shareholding norms, and 8 of them is where the stakeholding is over 90%, and most of it is in those 5 PSU banks that we were talking of yesterday and the stake that they have, and the others range between anywhere 80 to 90%. Now, which are those companies where there is a lot of, before that you see 2.1 lakh crore as of closing of yesterday, but at its peak when all of these stocks were at their respective highs, that excess stake was well over 3.1 lakh crore rupees. So it's down by almost a third as of now. It's also because of the correction that we have seen in the second half of 2024 in a lot of these PSU names. And look at this, LIC is a case in point. The government stake almost around 97% as of now, and the excess 21.5% that they have is valued at well over 1 lakh crore rupees. So that is one. The others, of course, are those PSU banks that we spoke of yesterday, and IRFC finds a mention in this list because that 11.36% excess stake, and that is valued at close to 17,000 crore rupees. Now, all of these names have corrected anywhere between 25 to 40% over this last few from their respective peaks, and that shows in the decline in the respective shareholder value as well for the government, because at the peak that LIC had made in February of last year, that excess government stake was valued at over 1.6 lakh crore rupees. IRFC is down 40% from its peak. At its peak, the government stake, that excess government stake, was valued at close to 30,000 crores. Same is the case for Indian Overseas Bank and for the other names like UCO Bank and Central Bank of India as well. Now, we spoke of those 5 PSU banks that would hit that upper circuit limit in yesterday's session because of that CNBC-TV18 news break, where they had mentioned about that 2,000 crore QIP each for these 5 names, which includes the likes of Bank of Maharashtra, UCO Bank, Central Bank, Punjab and Sindh Bank as well. And that unsold excess stake for the government in these 5 names is almost close to 50,000 crores. So that needs to be kept in mind. There are also other names like Mazagon Dock, where the street is buzzing about. Mazagon Dock has been a rank outperformer among these shipbuilding companies. There also the street is abuzz about a potential offer for sale. We have had this conversation in the D Street chatter as well with Nimesh. He also mentioned that, and that excess government stake, the government currently owns around 84.8% in Mazagon Dock, and that excess stake is valued at around 4,500 crore rupees. So PSU banks in focus, but that has now put the spotlight on other PSU names as well, where the government stake is over 75%.
All right, we take that point. Let's keep an eye out on the screen. At the bottom of your screen, we have Sky Gold, which has onboarded Aditya Birla Jewelry to expand market presence and diversify into new jewelry segments. So basically, there will be suppliers to Aditya Birla as well. The stock has seen a bit of an improvement, but though we'll keep an eye out on this development. It's a B2B development more than a B2C development itself, but a good big client, big potential client, given the sort of thrust that Aditya Birla Group has on the consumer space, in particular the jewelry business itself. They've onboarded Aditya Birla Jewelry as a client itself, and now the stock seems to be moving higher, up around 1%. But Tata Power is the stock which is in focus. Vivek joins in. Tata Power, Vivek, has likely submitted bids for privatization of 2 UP discoms?
Well, that's right. So it's an important development as far as the entire power sector is concerned. Privatization of discoms, something that's been the ask of both the discoms, power financiers, as well as private utility players, is back in focus. On January 12th, the UP state actually went ahead and invited tenders. This is to go ahead and call for transaction advisors to help in PPP JVs or in the privatization of discoms. Now, out of the 5 discoms that the UP state government holds, they have invited bids for 2 of these 5 discoms. And what we understand from our sources is that Tata Power is interested, evinced interest, also looking to go ahead and submit bids as far as acquiring these particular discoms are concerned. Now, how will this particular PPP JV work? 49% will continue to be held by the UP state government or the discom. Another 51% will be held by the eventual winner of the entire bidding process. So 51% part of the JV will be held by the private utility player. So an important development. It's a development that will most likely take quite a bit of time to fructify, given the fact that this is a sensitive topic, especially in terms of both unions as well as enough votes coming through for going ahead and getting votes on board for the entire privatization process. It's an important development in the power space, and we'll keep track of this particular development. We reached out to Tata Power. At this point of time, they haven't given us any comments as yet.
The importance of the development is evident from the gains that you are seeing in shares of Tata Power, building on to the gains that were seen at the start of the session. And since the news break, the stock has now surged to the highest point of the day, 3.75% higher now at around 370 is where Tata Power is. And that has had a cascading effect on a lot of other power names as well, be it the likes of NTPC, BHEL, and a lot of these names that too are trading with healthy gains in today's session. NTPC now trading with gains of 4%, BHEL too gaining a similar quantum. Time for a short break. More on the markets and specific stocks on the other side. Stay tuned.
It's been over 2 decades of tracking the global power shifts at the World Economic Forum. Starting from our first story reported 20 years ago to last year's groundbreaking coverage of the world's most important economic event. From discovering era-defining ideas to connecting you with the world's visionary thinkers and doers. From decoding blueprints for growth to driving collaboration to make a better future. We've been bringing you a wealth of information through 20 seasons. Tune in to Davos Diaries at Davos 2025, live and exclusive on India's most trusted business news platform, CNBC-TV18.
Welcome back. Just pull up the intraday chart of Nykaa. Nykaa's seen a big surge, and from the lows itself, the stock has seen a rally of almost 20-22%. They've reported a good performance in the third quarter when it came to the quarterly update as well. And this is further accentuated by the numbers that came in from some of the peers. So Shoppers Stop reported its numbers yesterday. Shoppers Stop's beauty business grew just about 3%. And in light of that, Nykaa's own beauty business growth, beauty and personal care business growth of upwards of 25%, has the street, looking at it a lot more favorably than what the peers are saying, because obviously when you have a peer comparison, your number looks a lot better at 25% when the others are doing just about 3%. So keep an eye out on this space. Very, very interesting. Fragrances is the business that grew very well for both Nykaa as well as Shoppers Stop. Nykaa currently spiking to the high point of trade. But speaking about the fashion and apparel space itself, we have Aditya Birla Fashion, which has approved nearly 5,000 crore rupees worth fundraise via a QIP preferential issue. Vinny joins in with more details. Vinny, they've raised funds to alleviate stress on their balance sheet.
Absolutely, that's the main reason for that. Now, this is around 5,000 crores is what they're raising. When you look at it, there's a QIP as well as a preferential issue. Now, preferential issue, one is to the promoter group entity, that's Pilani Investments. The preferential issue is of around 4.08 crore shares, which is at a price of 317 rupees per share. So, total aggregate of that is 1,297 crores that the promoters will be putting in the company. Now, post that, Pilani will hold 3.9% stake. Now, other one is to Fidelity Group. There are a couple of Fidelity groups that they invest that will be investing in the company. This is at around 3.9 crore shares, and that is going to be at a price of 272 rupees per share. And aggregate consideration is around 1,081 crore rupees. And Fidelity Group will now almost hold 3.45% stake in the company post this investment that comes in. Now, do not forget that when you're looking at it, both the prices of Pilani as well as Fidelity seems a bit different, right? 317 and 272. So Pilani, that's a promoter group, is investing at a premium of 16.5% versus what Fidelity is investing in terms of a pricing. So yes, that's an important update coming in there, because this surely is signaling a strong conviction that's coming in terms of value creation potential for ABFRL, clearing out their balance sheets, paying off the debt that is there. So an interesting one. An average price for the preferential issue, you could say, is around 295 rupees per share. Now, other than that, obviously there is a QIP that is there of 2,500 crores as well. So 5,000 crores in total is what they're raising. And do not forget that they've had a lot of fundraisings that they've had in the recent times post-COVID that you look at it. Starting in June 2020 was a right issue. Moving on, there was a preferential issue in 2021. 2022 also saw a preferential issue of 595 crores, as well as warrants of around 1,900 crores were raised in March 2024. And moving on, September 2024, there was a share swap which took place of around 1,755 crores. And then now is the recent raising that's of today that we're watching out for, in total of around 5,000 crores.
Indeed, trying to deleverage the balance sheet is Aditya Birla Fashion. Vinny, thanks a lot for that. There's no significant reaction in the stock, though. It continues to trade around about the flat line, as has been the case for a better part of the trading session. But the index, as of now, still holding on to gains of around 50 points. The broader markets, though, are doing fairly well for themselves, and it's a good time to give you a sense of what the F&O scheme of things are looking like. And Manglam, what is the data indicating now?
The data is indicating good recovery from yesterday's low. In fact, after the big fall that we saw 2 days ago, there has been 2 days of consolidation on the way up. led by the Nifty Bank, which is up almost 2% in the last two trading sessions with an up move today. The Nifty too holding up with gains of almost 50 points. Like we pointed out at the start of the show, it's important because the Nifty's finally made a slightly higher high, and we're still below that. But, the good part is that it's a start. At day's high, Nifty today was 23,293. Yesterday was 22,3,265. And that's the first time in the last 9 sessions where the Nifty has actually gone ahead and made a higher high. That brings us to the other point. Because the Nifty has made a higher high and the Nifty Bank is doing well as well, could the street be believing that there is support at the near term? Why do we say that? Because the mid-cap index typically does well when the broader markets see support at the lower levels itself. And that's why the mid-cap index has consistently moved higher from yesterday's lows up around 3.5–4%. And we have more stocks advancing than the number of stocks which are declining. So those are a couple of factors that we'll keep in mind. And even if you look at the breadth of the market, the top mid-cap gainers, the top F&O gainers, they don't belong to one particular sector. If you look at, the top gainers in the F&O space, they are the likes of Persistent Systems, there is Indus Towers, there is MCX, there is Indus Hotels. Now, as we speak, a big spike on Vodafone Idea and HDFC AMC as well. So it's broad-based, not particularly one sector itself. So we'll keep an eye out on that. But having said that, there is put writing which has come back. 23,300 call writers are still active. We need to cross past that 23,350 mark for further up moves in the market. Tomorrow is the Nifty weekly options expiry. 23,300 call has almost 1.5 crore shares in open interest. For the Nifty, it's imperative to cross 23,350 for it to see further short covering. But at the lower levels, we have seen writing at the 23,200 put, telling you again 23,150 to 23,200 thereabouts could be a support zone. We're currently at 23,250 odd itself. The one stock that I'm watching out for is ABFRL. We've just heard Vinny speak about their fundraise, etc. With the kind of open interest build up, the stock may enter F&O ban, and we'll keep an eye out on it.
Keep an eye out on it indeed. It's a big, massive day tomorrow, right? Weekly expiry, earnings, we have Infosys, we have Reliance Industries, and we'll be reacting to the US CPI numbers as well that come in later this evening. So there is plenty to track for our markets tomorrow. But before that, we need to conclude today's session as well. And moving on, then we're expecting foreign investors to be very engaged in the Indian market this year, and that's the view of Morgan Stanley's Jonathan Garner. Now, he also added that the earnings slowdown is a 2 to 3 quarter phenomenon before it recovers. Listen in.
The weight of India in the EM index has actually been going up. And with the domestic bid very strong, valuations are relatively elevated. I wouldn't say they're extreme, but they're relatively elevated. We expect foreigners to be very engaged in the Indian market this year. Over time, it's on its way to being the largest market in EM. And that means global investors are going to pay a lot more attention to India than they have in the past. What's important, I think, is that GDP growth is over 6%. We're forecasting 6.3% and then 6.5% this year and next, the year ending March and then the following year. That inflation remains moderate, a little over 4%. The interest rates, we get 2 rate cuts in our view, and we think it's a 2 to 3 quarter phenomenon. If we're wrong, if it's a 2 to 3 year phenomenon and earnings growth falls away substantially, then our call on the market will be wrong. So whereas we're overweight India, for example, we're underweight Korea and Taiwan. So in Korea and Taiwan, tech means tech hardware, semiconductors. And there you've shifted from what we call the AI enabler or infrastructure rollout phase to what's now the adopter phase. You are going to see a slew of tariff and non-tariff actions, and that's going to be an issue for the more trade-dependent and US-exposed markets in Asia.
Jonathan Garner there and his views on the Indian markets. But Pritesh Mehta, who is the Senior VP Research at Yes Securities, is joining in now for a quick chart check. Pritesh, good afternoon. Thank you for joining in. We did break this streak of making lower highs after almost 9 odd days, but we've not sustained at the highs as of now. Do you see a recovery on the index in the second half? Some key levels that you're anticipating and the stock recommendations this afternoon as well?
Yeah, good afternoon. See, it is good to see a bit of green on the screen as of now. But since our last interaction, Nifty broke below the November low. But good thing to observe is that Nifty is now consuming time rather than witnessing follow through. So that's a good sign. Apart from that, when I look at my broader markets, this is Nifty 500, Nifty Mid Cap, Nifty Small Cap 100 Index. This indices, if I look at the breadth of this indices, they are reversing. And in fact, our customized breadth has given a positive bullish crossover. So what we have seen historically, whenever when from extreme pessimism zone, the breadth reverses, we tend to see follow-through moves even in price. So I think we are done with the correction in the broader markets. It's time for the Nifty benchmark index to consume time and stabilize, and then we can see reversal move coming in. So I think it will take some time before Nifty participates on the upside, but I think broader markets are done with correction.
All right, we're done with the broader market correction. Then what about individual stocks? What are you playing? Are there any long ideas?
Yes, of course. The first stock is LTF. So this stock is reversing of the pre-COVID highs. So it is holding on to the GAN number of 121, and now we are witnessing a pullback moves on the upside. So buy for a target of 152, and the stop loss would be around 126. Second one that we like is AU Bank. The stock has bounced back and witnessing follow through after a bullish anchor column. So buy for a target of 640. The stop loss would be around 560.
All right, Pritesh, thank you for joining in and sharing with us your views on the index and on specific stocks as well. L&T Finance, one of his recommendations, mind you, the stock is in the FNO band today, so we'll keep an eye out on that as well. Time for a short break. We get you more on the markets on the other side. Stay tuned.
And your son's sailing every day. Yeah. So, talk about all the lessons and all of that. Are we on the cusp of a breakout moment for the experience economy in India?
It's like the analogy from Formula One. So the car that's in front of you is cutting through and creating the slipstream and using more power and energy.
Yeah.
And the guy who's behind you is using 25% less. And he can press the DRS and get ahead of you.
Yes.
We live in 4 Indias. We live in the London of India, which is about 5 million people. And then there's about 50 to 60 million Indians, which I call the United Kingdom of India. Then there's 400 million Indians, which I call the Brazil of India. And then you've got about 300 to 350 million Indians, which I call the Africa of India.
Let's address the issue that you've been dealing with in the last few months on account of what's happened with Coldplay. You've got investigative agencies, you've got the EOW, you've got the GST authorities.
I've got a clean conscience. My karma is good. I sleep well.
Welcome back. Let's talk about Blue Dart. It's launched India's largest integrated operating facility at Bijwasan, Delhi. To discuss this in detail on the facility launch, we are joined by Balfour Manuel, who's the MD at Blue Dart, and also joined by Tobias Mayer, who is the CEO, DHL Group Global. Thanks a lot, gentlemen, for joining in for this exclusive conversation. Mr. Manuel, let's start with you first. This new facility that you've launched, if you could, quantify the expected impact on Blue Dart's performance due to this facility.
Well, this is the first integrated facility of this type. What this means is it allows us to enhance our multimodal capability. So it's very close to the airport, so we can palletize goods and move from here. It has e-commerce, it has some part of ground, and it's an air site. So this is the first integrated kind of a facility that we have seen in the country. And what it means, it's also located very close to the economic corridor, Dwarka Express. So it's a very strategic facility for us.
All right, a strategic facility for you. Mr. Mayer, coming to you, how does DHL plan to expand its offerings and presence in India through this facility?
So we have been in India for many, many years. We have been here through DHL Express, DHL Global Forwarding, DHL Supply Chain in the international transport space, and with Blue Dart as a domestic express provider. We have upgraded capacity in all segments. We have added aircraft for Blue Dart here to enhance service, but also increase capacity. That's one investment we have just recently taken. We're here today near the airport in Delhi, opening a new facility, 25,000 square meters, to particularly cater to the interconnection between air transport and surface transport. And we have more plans for this year, for the year of 2025, but also for the years to come.
Right, Mr. Manuel, how does Blue Dart plan to capture the changing needs in the logistics segment now with the advent of quick commerce and other fulfillment channels as well?
Blue Dart is the only player who works in all the verticals, small packages, air, ground, and also international express. So we have quickly moved in, with the growth pillars of ground and e-commerce. That segment is growing. So our adoption is very encouraging, and we are in line with our projections.
All right, in line with your projections, Mr. Mayor, what are the potential synergies between DHL and Blue Dart beyond the current scale and efficiency? If you could give us more sense, because you've just said that you will continue to invest in India.
So the most important thing is, as we as DHL want to serve our customers comprehensively when it comes to their logistics needs. But we also want to do that with the respective expertise in the logistics. And nobody knows India like Blue Dart. I think this is what we can honestly say. So we have a specialist for the local environment, but we combine that with the strength of DHL globally, with our presence across the world, with our expertise when it comes to international transport. That's the most important synergy. Operationally, we also do things together. We collaborate on aviation. We provide aircraft, for instance, through our DHL aviation infrastructure. Blue Dart carries some shipments to remote areas for our international customers as well. So we also collaborate on the operational side.
Right. Now, Mr. Manuel, can you offer any comments on the competition within this space?
No, we don't make any comments on competition. Yeah.
All right, you don't make any comments on competition, but it's imperative given the sort of, activity that is taking place in the listed and the unlisted space as well, the new age competitors, etc. I would like your thoughts on that. But let's go back to Mr. Mayor then. What kind of investment have you lined up in India? You said that you are looking to do a little more.
We want to continue to lead in the international express space. We have upgraded infrastructure for Blue Dart, particularly for surface transport, as well as for e-commerce. We see a lot of potential. We have seen good growth, and we will make the funds available to continue to expand infrastructure here in India. So we are very excited about the opportunities that the country has, particularly now that road infrastructure has really taken a step forward to help our customers leverage that. That's part of our investment strategy.
All right, we take that point and wish you good luck for the remainder of this year. More importantly, growing in India at a time when things are looking a lot competitive, and it's changing as well. So you've put your money where the mouth is. You have integrated this facility, which lines in with the Gati Shakti corridor itself. So we'll try and wait by to watch any sort of proposals or any sort of improvement that comes in on your business on account of this itself. Thank you so much for joining in. With that, we'll slip into a short break. On the other side, we focus on a lot of stock-specific action. Stay with us.
Welcome back. Vodafone Idea is now up 10% in today's trading session. It's been a very sharp surge that the telecom service provider has seen, but still below the FPO price of 11 rupees. So it's currently reached that mark of 9 rupees now after the correction that it had seen. So good going for Vodafone Idea, at least in today's trading session. Keynes Tech is seeing a bit of a rebound after some profit booking that it had witnessed over the last few days, 6.5% higher there as well. And of course, Devyani International is another 6% higher after Macquarie's coverage initiation in today's session. But microfinanciers are the ones in focus today, following notes by brokerages like Jefferies and Goldman Sachs. Abhishek is here to tell us more on those. Abhishek.
Released by CRIF is what these guys have been speaking, that is Jefferies and Goldman Sachs, and it is a back-ended data for Q2 FY25. So data suggests that lenders have cut disbursements by 29% YOY, which has led to weakening of AUM by 4% on a sequential basis. So Jefferies also says that the number of borrowers and ticket size of loans have fallen after many years. So overdue loans have risen from 2.7% in June 24 to about 4.9% 0.4% as of now, led by leveraged ones. So asset quality may take some time to normalize and loans may unwind, leading to pressure on the earnings front. With respect to, Utkarsh Small Finance Bank, Spandana and Credit, they have higher share of more than 4 loans per borrowers, which can impact them negatively. Bandhan Bank, as per them, can fare better. Now, Goldman Sachs has written on Credit Access Grameen, they have a sell rating and a target price of 577 per share. They say that they have analyzed bureau data to see any signs of recovery in MFI industry, where they don't find any encouraging point at this point of time. So incremental bureau data points that 37% of MFI borrowers do over leverage or overlap with retail borrowers as well, and that delinquency over there has been increasing on both MFI as well as retail loans by the same borrower. This represents about $18 billion of retail loans and about $10 billion of MFI loans. With respect to stock prices being off low, if you take a look, Equitas, Credit Access Grameen and Spandana Spurti, they are off lows anywhere between 12% to 20%. Back to you.
All right, we take that point. Thank you, Abhishek, for that. HDFC AMC is the other stock which is buzzing on a strong quarter and positive brokerage notes. Vamakshi gets us more. Vamakshi.
Well, good afternoon, Mangalam. HDFC AMC reported its numbers yesterday and it was a good set, and we have a couple of brokerage notes that have come in today. The first one is from HSBC. They have a hold rating on the counter with a target price of 4,350 rupees per share. They say that rationalization of commission payouts and control on operating costs have resulted in strong growth in the company's net profit in the third quarter. But the market share has stagnated in equity AUM and SIP flows, which can keep punchy valuations in check. They've gone ahead and, however, raised their FY25 to 27 EPS estimates by 0.4 to 4.1%. Nomura is the other brokerage that has come out with a note on HDFC AMC. They have a buy rating. They have a target price of 5,250. They've gone ahead and raised their FY25 to 27 EPS estimates by nearly 2 to 3%. They build in very strong operating profit CAGR of almost 20% from FY25 to 27, and they expect it to largely track average AUM growth. Lastly, there's a note that has come in from Nuvama. They've maintained their buy call on this counter and gone ahead and raised their target price from 5,150 to 5,200 rupees per share. They say that the company is steady sailing despite choppy markets. Yields have improved sequentially. Steady operational metrics have been witnessed across segments, and they're building in improved yields, and therefore they've gone ahead and lifted their FY25, 26 and 27 net operating profit estimates by 3.4%, 4.1% and 3.5% respectively. So overall positive brokerage notes coming in from HDFC for HDFC AMC, and therefore the stock is up in trade.
6% higher now for HDFC AMC, continuing to go from strength to strength. Vamakshi, thanks a lot for that. At the highest point of the day now, as much as an underperformer it has been over the last 1 month, today is turning out to be a good day for HDFC AMC. What is also turning out to be a very good day for is BSE, and that is after a brokerage note that came in from Nuvama, where they have initiated coverage on the stock and they have a price target of 67.30 is where Nuvama is for BSE, and that is a potential upside of around about 24% from yesterday's closing levels. Now, what Nuvama is saying is the fact that the derivatives segment for BSE, which is a key segment, that will continue to grow despite the regulatory challenges that it is currently facing with all the changes to the F&O norms that we have made by market regulator SEBI, and that the impact that it has had. And Nuvama is now forecasting a revenue CAGR of almost 40% over FY24 to 27, and is also forecasting an adjusted profit CAGR of almost 70% over this same time frame. Now, what they also say is that as the lot sizes will increase, as and when that happens, that will lead to a decline in clearing costs, and once that happens, that will lead to a boost in margins for BSE, is what Nuvama is saying. And what they also say is that BSE has multiple streams in place in order to boost growth. So that is some positive commentary from Nuvama, and Nuvama is not the only one, and that's because over the last few days there has been a slew of brokerage commentary that has come in for BSE, and Goldman Sachs initiated coverage with a 5,060 price target. Jefferies upgraded the stock yesterday with a price target of 50 to 50. The interesting bit is that the stock is now trading well above both these price targets. So a good day for BSE. It's been a good week as well so far for the stock.
All right, a good day, a good week for BSE as well. Had seen a bit of a correction from the top on account of these regulatory fears, but brokerages over the last couple of trading sessions saying that those regulatory fears are unfounded. In fact, BSE stands to gain from that. Another stock which is surging now as we speak, Persistent Systems at the high point of trade, and Indian Hotels too reports its results later, in the next 10 days or so. And remember, the third quarter is extremely strong for the hospitality industry. And you also have the Kumbh, which is playing out right now. So a lot of travel and tourism attracted in this space itself. Indian Hotels continues to do well. But take a short break, come back on the other side. We tell you what a couple of numbers that are expected and what the street is expecting from the likes of HDFC Life and L&T Tech Services.
Welcome back. The Nifty has suddenly picked up pace after a bit of a cool off at the start of the show. 70 points higher now on the index. So some recovery that we are seeing. The dips are being attempted to be getting bought into. We spoke of gainers before going into the break. There's some losers as well. And all of those PSU banks that were the high flying names in yesterday's trading session that jumped anywhere 17, 18, 20% after the CNBC-TV18 news break. They are the ones that are seeing a bit of a cool off now in today's trade after beat the likes of Central Bank of India, Indian Overseas Bank, UCO Bank, all of them trading with losses of 6.5 to 7.5% in today's trade. Although the PSU Bank Index is doing well for itself, but most of these low float names are the ones that are seeing some bit of profit booking after yesterday's surge. But moving on to some results that are anticipated in today's trading session, L&T Tech is one of them, and Rima is joining in with what the street is expecting from the company. Rima.
Thanks so much for that. So first, let me give you the key expectation. In terms of numbers, dollar revenue growth up 2.3%, constant currency revenue growth seen higher by 3.2% on a sequential basis, margins expanding to 15.5%, and a profit number of about 330 crore. But here the key will be on their guidance. For the full year, the company is guided for 8 to 10% revenue growth. But Kotak believes the company could lower its guidance to 7 to 8%. So does the company hold on to its guidance or will there be a downward revision? Also remember, because growth for most of these ER&D companies have slowed down, L&T Tech also as a stock has underperformed. So in the last 1 year, the stock is down 12%, while the Nifty IT index is up 15%. So it's underperformed. So for the stock to do well from here on, it needs to show a beat, it needs to deliver on numbers and hold on to its full year guidance. Back to you.
All right, Rima, thanks a lot for that. On the other side of this short break, we focus on stocks like Minda Corp, which is buzzing after acquiring nearly 49% stake in Flash Electronics. Welcome back. We have a bunch of stocks which are buzzing around right now, and they are from the QSR and QSR support space. So we have Devyani International, which is up around 7%. Zomato is buzzing from the lows on hopes of inclusion in the Nifty in the next rejig whenever that happens. Zomato, remember, in the last rejig of the F&O stocks was included along with a bunch of stocks, around 30, 40 stocks which were added in the F&O space. That makes it eligible to be included in the Nifty, so we'll keep an eye out on that one. The other stock, because Zomato is buzzing, is Swiggy. So look at Swiggy. Now Swiggy is moving a couple of steps harder than Zomato, up around 6%. And that's largely because of the valuation differential that most on the street believe should narrow, given an almost equal position in the food delivery space and perhaps some improvement in the quick commerce space for Swiggy coming in on the operational front of the big discount that it is trading with when it comes to Zomato itself. So those are a bunch of stocks which are buzzing around the broader market, even as the Nifty holds with a gain of almost 60, 65 points. Minda Corp is the other stock, which is up around 4% in today's trading session. That is after the company has acquired 49% stake in Flash Electronics for about 1,400 crore rupees. Sudarshan joins in with the details of this one. Sudarshan.
So Minda Corp today has announced an acquisition of 49% stake in Flash Electronics for a value of rupees 1,370 crore. It's done at an enterprise value of rupees 3,100 crore and at an equity value of rupees 2,800 crore. It's an all-cash deal, and company expects the deal to be completed by the end of this month. Talking about Flash Electronics, it's manufacturer of powertrain and EV components to auto OEMs in India and overseas. Over overall, it has 8 plants. Of that, 6 are in India and 2 are in Europe. Key clients include Audi, Bajaj, BMW, Ducati, Harley-Davidson, M&M, Royal Enfield. Now, talking about the earnings in FY24, its revenue was 1,340 crore, which company expects to increase to 1,590 crore in FY25. That would be a growth of almost 20% year-on-year. EBITDA was rupees 185 crore and margin was around 14% FY24. Now, talking about the contribution to the revenue, India currently contributes 76% and from overseas, contribution is around 24%. Two-wheelers currently form 76% of total revenue. Now, product-wise, if we talk about the contribution to total revenue, electricals and electronics forms 45%, EV forms 20%, and another 20% is formed by metallic segment. Now, Minda Corp has talked also about synergy. So, in the synergy, it says both the companies have adjacent portfolio, both the companies are Pune-based and have similar product profile, and that will help in the synergy once the acquisition is completed, and that's the reason you are seeing a 4% rise in Minda Corp stock.
All right, Sarshan, thanks a lot for that. From Minda Corp, let's move on to HDFC Life. As promised, the company is expected to report its third quarter numbers today. Yash joins in to tell us what the street expects from this one. Yash.
Well, Mangalam, numbers from HDFC Life expected post-markets today, and as far as the quality of the numbers are concerned for the third quarter, they're largely expected to remain soft. Here are 5 things that, as a CNBC-TV18 poll, one should watch out for HDFC Life. The first one is gross premium. That is expected to grow at about 12% in the third quarter to come in at about 7,954 crore rupees. The total annualized premium equivalent, or AP, that is expected to see a single-digit growth of about 9%, expected at about 3,488 crore rupees. Retail AP also seeing a similar growth as total AP of about 9% at about 3,051 crore rupees. Importantly, 2 numbers, value of new business, that is expected to see a very soft growth this time, just about 2% at about 869 crore rupees. And the margins, VNB margin, that is expected to compress by about 188 basis points on a year-on-year basis to come in at about 24.92%. Important to, understand what the stock has done in the recent past, considering the numbers that are expected. The stock is down 17% in the last 3 months and about 6% in the last 1 month, trading at about 2.3 times FY25 estimated price to embedded value.
All right, Yash, thanks a lot for that. There's a wave of up move in the market as we speak right now. Reliance, the intraday chart should come up for you. A big move is what we're seeing on that stock at the high point of trade, surging away from the lows, reports its numbers tomorrow, and that is also causing an up move on the Nifty itself by virtue of its weight. So pull up the Nifty and you'd see it's at the higher end of today's trading range, if not the high point of trade. So once the big boy starts moving, we see an up move, a concomitant impact on the Nifty itself. The intraday chart of the Nifty comes up for you 23254. The high today has been 23265, so just about 10 points away from that. The other stock which is seeing a lot of buying is Trend. So wave of buying in a couple of these retail names, especially after Shopper Stop's numbers. So you have Trend, which has moved 6% higher from lows. Remember, the stock has seen a correction of almost 25% from its highs. The other one is Nykaa. We pointed out earlier in the day that Nykaa's numbers, now that we have Shopper Stop's beauty sales as well, looks a lot better. So Nykaa has moved to the high point of trade, and giving it company at the high point is Polycab as well, which has only seen a bit of a spike in the last 10 minutes or so, currently at the high point for Polycab too. With that, we wrap up on this edition of this edition of Halftime Report. Business Lunch, the theme of that will take all the market action ahead after this break.